Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's get across what we saw on global markets overnight. They did rally as the US Senate moved towards ending the US government shutdown. Senators passing a bill that will be amended to fund the government until January 30th. That boosted risk-sensitive assets with Wall Street's main indices charging higher. Most tech stocks surged, led by Nvidia, while Alphabet and Meta also gained. Airline stocks initially climbed on hopes of a potential end to the federal government shutdown, with flights having been cut amid air traffic control staffing absences, but then they pulled back late. In the healthcare space, Centene fell heavily, while Humana and Elements Health also fell, with the agreement to end the government shutdown only including a promise to vote on extending medical subsidies. Metsera slumped as Pfizer won a $10 billion bidding war to acquire the company, while Eli Lilly shares gained to hit a new record high after a broker upgrade. Shares of Meatpacker Tyson Foods rose on forecasts of annual revenue largely above analyst estimates, betting on demand for chicken products. And US listed shares of BHP and Rio gained, tracking a rise in copper prices. Well, the US Senate has voted in favour of a bill to end the government shutdown. Under the agreement, Congress would pass full-year funding for some departments and fund other agencies until January 30th next year. That paves the way for the shutdown to end potentially by the end of the week, but it still needs to pass the lower house before gaining the approval of President Trump. White House economic advisor Kevin Hassett warning that US economic growth in the fourth quarter could be negative if a federal shutdown drags on, saying Thanksgiving time is one of the hottest times of the year for the economy, and if people aren't travelling at that moment, then we really could be looking for a negative quarter. However, Federal Reserve member Alberta Muslim saying we're going to get, I think, a substantial rebound in the first quarter. It's very important that we tread with caution because I believe there's limited room for further reductions without monetary policy becoming overly accommodative. Well, US Treasury yields rose on the prospect of an end to the longest US government shutdown in history. The US 10-year extending gains to 4.15%. The 2-year was around 3.6%. The US dollar index little changed. The Aussie has jumped to 65.4 US cents. Oil prices vacillated as traders weighed up rising supply with high demand from an end to the government shutdown. Brent crude futures up almost 0.5% at close to $64 a barrel. Copper surged more than 3%. Iron ore rose more than 1% to $102 a tonne, and gold jumped higher to hit a more than 2-week high as soft economic data out of the US reinforced expectations that the Fed will cut interest rates next month. Spot gold around 3% higher at close to $4,110 an ounce, and risk on settlement has pushed Bitcoin close to $106,000 US. All right, now let's focus on US equities with a particular look at the tech sector. To do that, we are joined by Wedbush Securities' Dan Ives. Dan, great to have you back on the show. Thanks for joining us. Now, this comes in the wake, of course, of we've heard those quarterly earnings results from most big tech companies, save one, of course, Nvidia to come. Before we get to that, what did you learn from those earnings results, particularly given growing concerns about an AI bubble forming?
Look, I mean, the bears have been saying bubble in their hibernation, right, in their caves the last few years. I think to some extent, if you look at the quarter, it's a validation moment for the AI revolution. I mean, look, the CapEx numbers are going to be up 20, 30% more than the street thought. Look at use cases in terms of Palantir, what we saw. And I think that is now just starting what I view as really the next stage of this AI revolution. Look, I think there's 2 to 3 more years left in this tech bull market. Any talks of an AI bubble, I think, are way, way, way premature.
All right, you actually mentioned Palantir then. Interesting, that led a bit of a pullback we saw last week. So what did you make of those moves? Just a bit of risk off in that sector.
Yeah, I think, look, that sort of started that sell-off that we saw this week because that was an off-the-charts quarter in terms of U.S. commercial business. I mean, that beat the street by about 40, 50%. And the fact that that stock sold off, I think that kind of sent investors heading for the elevators, right? That was sort of that white knuckle moment. Then, of course, you have the bury in terms of the tweets, worrying about shorts, the bubble talk. I just view it as this is just a small speed bump, and it's our view, as we've talked about. I mean, you have more money being spent in the next 2 years than the last 8 to 10 years combined. That's what this is, a fourth industrial revolution. I think Palantir, we think that's $1 trillion market cap next 2 or 3 years.
Dan, let's concentrate on those, the CapEx forecasts then. Interested to see what you make of it company by company. Certainly, we saw Amazon raising its CapEx forecast there significantly. Alphabet also bumping up its CapEx guidance. Microsoft, though, didn't share a quarterly or full year CapEx estimate, but said investments will grow faster in fiscal 26. So what do you make of that? Because I guess part of that is the issue for investors, just concerned how much money is being spent.
But look, it's an AI arms race. I mean, you're talking about essentially a new economy being built from a consumer and enterprise perspective. I mean, look, if you sat here a year ago, big tech CapEx was supposed to be $220 billion. It's going to be actually closer to $380 billion. So I think next year we could be looking at 550, $600 billion of big tech CapEx. Then you look at sovereigns, you look at rest of the world. I mean, we're talking trillions that are going to be spent. Guess who that's bullish for? Nvidia. Bullish for AMD. It's bullish for the hyperscalers, Microsoft, Google, Amazon. It's bullish for Palantir, Oracle. It speaks to my view. We talk about in the Ives AI 30, second, third, fourth derivatives of AI that are playing out. And we see it on the authentication side. As my chairman of Orbs, we see it in terms of human proof. That's really going to be the future when it comes to the AI world.
Dan, what do you make of Meta? Those shares did tank after it posted earnings that missed estimates. I mean, that was largely because of a one-off tax charge there. Nonetheless, compared with what we're seeing with Alphabet and Amazon, both those companies, they have the cloud businesses, of course, that provide that immediate path, I guess, to monetization. Not so Meta. What are your expectations for Meta?
But I mean, Meta, look, that's good money after good money. I mean, you want to see them ramp up on CapEx. I get that, earnings and free cash will go down next year. But I mean, right now, Zuck is wartime CEO, building out the next sort of franchise and really chapter of Meta. I think that stock's a gift. It's a table pounder, in my opinion, the way that the stock sold off. I think that the street is, misinterpreting it. I think underestimating what this growth is going to look like for Meta over the coming years. I think that continues to be the right strategy.
Dan, are you concerned at all with concentration risk? I see, for instance, OpenAI accounted for nearly all of Oracle's cloud computing backlog. Should that be of concern?
Look, the stronger are getting stronger. And I think now you could say it's concentrated, but that concentration is going to be reduced over the coming years. But it's really big tech that's essentially building out this AI revolution when you think about the trillions being spent. With some of the words about circular deals with OpenAI and things, so I view that much more collaboratively. I mean, I don't view that negatively. I actually view it as an accelerated timeline to they're building out what this fourth industrial revolution is going to be.
Dan, let's look ahead to Nvidia. What are your expectations? Of course, they seem to surpass those very high expectations every time.
Get the popcorn out in Australia. Get ready for that. I mean, look, I think you're going to have just a massive earnings beat. I think you're going to see ultimately all of this capex that we're seeing. Demand the supply is 10-1 for Nvidia chips. And I think this is going to be a $6 trillion market cap next 12 to 18 months. And that's going to be just more of a validation moment for what we see with AI spend. I think that's where you're going to see tech stocks rally 8 to 10% rest of the year. There's only one godfather of AI, that's Jensen. And I continue to believe this AI party, it started at 9 p.m., now 10:30 p.m. Party goes to 4 a.m.
Okay, well, watch out for that. Dan, I see you've also got an eye on cybersecurity, in particular a stock like Zscaler. What are your expectations there?
Cybersecurity is going to be a huge second, third derivative. Zscaler, I think that's another one, being underestimated by the market in terms of what AI is going to bring. I think that could ultimately increase revenues 20, 30% that the street's not even factoring in the next few years. Then look at CrowdStrike, look at Palo Alto. I mean, it speaks to my view. These are the second, third derivatives playing out across the AI revolution, cybersecurity front and center.
Dan, I can't go without asking you about Tesla and Elon Musk and the remuneration package, of course, that they voted on last week. What did you make of that? Is that a win-win as you see it?
So when we look, Musk is Tesla, Tesla is Musk, right? You need Musk at the helm going into the most important chapter ever in Tesla's history, the autonomous and robotics future. And I believe autonomous is worth $1 trillion alone. That's why, look, you could call Musk the $1 trillion man, but if he brings 4 or 5 trillion to value to shareholders, they'll overwhelmingly want it. And they recognize they need Musk in this position, just like Zuck's doing at Meta. I think right now, Musk, wartime CEO.
All right, Dan, overall then, as we head towards the end of the year, where do you see tech stocks going? Obviously, as we mentioned at the top there, with those concerns about an AI bubble, do you see those valuations continuing to move higher?
I think it's get the NASDAQ 25,000 hat out, get that S&P 7,000 hat out. I mean, that's my view. I mean, tech stocks are going higher. I think they're up another 20, 25% next year. Fed's going to continue to cut. You'll have a new replacement for Powell, which will be a dove. You have $7 trillion on the sidelines, and we're only in, like we've talked about, this is still early days of AI. And despite the bubble talk, I mean, the bears have been saying bubble the last 3 years. And I think they'll continue to yell as we see NASDAQ 25,000, 28,000, 30,000 over the coming years.
Dan, always terrific to catch up with you. Thanks for joining us on Wedbush Securities.
Thank you.
All right, let's focus then on where we're likely to start locally and looking to build on yesterday's gains. SPY futures up 0.5%. We're also going to focus on some results, particularly from CBA, Life 360 also out, along with Bendigo and Adelaide Bank, and a number of AGMs being held today as well. Join us in a couple of minutes for the Open.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.